Hey, how's it going, everybody? So in today's video, I'm going to show you a trade strategy for SOXL, which is a leveraged ETF that follows the semiconductor index. And this strategy was able to return 67% on average per year over the last 10 years. And it's a pretty simple strategy involving just heiken ashis and some moving averages. So I'm going to dive into the buy and sell criteria and some of the results of this strategy, and then show you some examples in TradingView of how it performed. I'm going to be sharing backtesting from wallstreet.io, so just keep in mind that none of this is financial advice, and all of the results that you're going to see from the backtesting represent historical performance, and it's not necessarily indicative of future results. So I found this SOXL strategy by going through some of the other Discover strategies in wallstreet.io, and then I kind of played with some of the values and made it so it was a little bit more general, had less criteria, less strict criteria than some of the highest strategies. And so the strategy mainly uses heiken ashi candles and a simple moving average. So most people are pretty familiar with a simple moving average. It just represents the 20 days average price that we've seen. And then a heiken ashi candle is a different type of candlestick that shows you some of where the momentum is in the trade. It basically does this by using moving averages as well from the candle before it. So it's an averaged candle. So it smooths out some of the jumps up and down the daily stock price. So if we're looking at here at the buy criteria, basically what we want to see is the first bullish heiken ashi candle, so a green candle, when we're below the 20-day simple moving average, or we're buying on the sixth bearish candle, or buying on the third bullish candle, regardless of where we are in relationship to the moving average. And with this first one here, I get the question a lot, is it the price as it shows on the heiken ashi chart, or is it the closing price? It's the closing price, not the heiken ashi close. So you want to use the regular close. And that's what this is showing you. So all these strategies are going to buy and enter the trade or exit the trade at the closing price of the day that the signal closes. So then if we come down here, we have our sell criteria, which is pretty simple. We're going to sell if we have the second bearish heiken ashi candle that's below the 20-day simple moving average. And same rule here, we're looking for the actual candle close, not the heiken ashi close. And then we're also going to sell if we're in the third bullish candle and we're under the 20-day simple moving average. So this is kind of like if we've had a big drawdown recently and then we're looking for that bounce, we're going to go ahead and get out at the third bullish candle if we're still below that 20-day simple moving average. Those are usually like correction bounces. And then here we have this profit target of 25%. So with this strategy, you can see that it's outperformed just the buy and hold of SOXL most years. It didn't do it in 2019 here. Avoided some volatility here in 2018. So this is one of the things I like to see. You know, each year here we were profitable. So some years we didn't perform as well as SOXL. In 2013, really, the strategy was a pretty poor choice in comparison to just the buy and hold. And then also some other stats about this strategy. It's got 16 average trades per year. See, batting average is 59%. And I'll show you here what I calculate as the Kelly criterion percentage. Here I'm using a factor safety of 2. So this is a formula that is used in sports betting and also in stock and position sizing. It's basically a formula that tells you what your edge is. You can, if you're interested in that, you can check out the link here. And yeah, so our biggest loss was negative 18.5%. That's also something you want to consider when you're sizing this, right? So max drawdown 31%. So SOXL is a little bit more volatile even than TQQQ and UPRO, some of the other leveraged ETFs that I like to trade. So let's look over here. If we go to when we were coming into the coronavirus, you can see leading up in January, it had a losing trade here. It got kind of whipsawed. It had another losing trade here as well, but then it avoided a pretty good downturn. And here's one of those third bullish candle trades, which turned out to be a pretty good one inside what was another pretty big leg down, right? So you can see it pretty much stayed out and didn't have too many winning trades during that time, but it also avoided coming here from, let's say, around the $13, $14 range, all the way down to $4. So quite a downturn in SOXL at that time. And then it picked back up and it was doing pretty good, and it was hanging in here for these trades. All right, so I wanted to come over here into TradingView and show you the strategy just because it's a little bit easier to see. And there's been some pretty good action in the semiconductors recently. So This is pretty interesting to see how it's playing out. So I've actually been in this strategy for the last 3 trades that it's taken, and then here on TradingView I've just kind of put some of the other trades in the past. And so right now you can see that it's in a trade that was based off of a signal from the 3rd bullish candle because we're over the 20-day SMA. And so we actually had a second bearish heiken ashi candle today, but we have not closed below the 20-day SMA. And I would check on the regular candle to make sure that was the case. And actually we had a pretty big bounce day today on the semiconductors, it looks like. So still a long ways to go to the 25% target. You can see here at the end of October, semiconductors had a crazy move to the upside. And this trade picked up right here on the 14th with the first green heiken ashi under the 20-day SMA. And then that one hit the 25% take profit level. And I mentioned this in other videos. You don't have to take full profit at these take profit targets. I would recommend taking at least half off the table at this point and then waiting for the sell signal. If you had done this in this case, you would actually still be in that portion of the trade because we haven't had a sell signal yet. So in this case, I like to rotate my capital into another trade. So I moved the position out once we hit 25%. So I think the strongest of the buy criteria is the single green heiken ashi below the 20-day SMA. And maybe the 3rd bullish heiken ashi candle can be slightly improved. But I'm interested to see how the strategy in this current trade play out going forward. But it does look like the most likely scenario is that we'll open after the holiday with a green heiken ashi candle. So we'll see where it goes from here. Thanks everybody for watching. If you enjoyed this video, make sure you hit the like button, subscribe to the channel if you want to see more content like this, and have a great day.